Alrighty guys, what is going up? I hope you guys are all having a great and amazing day today. Now in today's video, we're going to be breaking down why I spent $1,000 on First Solar stock. So I hope you guys enjoy it, and if you guys get anything in value, hit the like button. Smash that like button so more people can do it, so do it now. And if you guys want to learn how to properly invest in the stock market, go ahead and check out my course, and you guys can use promo code DIVIDENDS to get 50% off, so at least check it out. It'll be the first link down below. So now to jump into it, roll the intro, let's go. Bam. So like I said, I did spend roughly $1,000 on First Solar stock. That got me right around 10 shares of this company, and I do think this company has a lot of long-term potential. But for those of you that don't know what First Solar is one of the leaders in solar paneling across the whole United States, and they've been killing it in 2020, and I do think that momentum is going to continue to go into 2021 and for the next couple of years. Now what's crazy about this stock here is the revenue is up around 69%, and that's roughly around $3.5 billion, and they do have around roughly $1.6 billion in cash on hand, which is actually really strong. So if that's a First Solar company kind of slows down, they still have $1.6 billion to kind of keep that company afloat and to continue to pay off some of its debt, because it does have a little debt, not much at all, around $460 million. It's very common for companies to take on debt to actually grow the business, so that does not concern me one bit. You just want to make sure that they do have a lot more cash than the debt, which they do, so that's great. So now I do understand that they do have a little bit of a lower profit margin. Their profit margin is around 6%, which honestly isn't too bad, but it is still pretty low. So what that means is for every $100 First Solar gets, they profit $6, which isn't too great. But if you compare it to some of the other companies such as Tesla has a profit margin at 3.3%. So they are almost double what Tesla's profit margin is, so that's pretty cool too. So now with First Solar, they don't pay a dividend, which is very common to see growth stocks don't pay a dividend, because they want to use that money, reinvest it back into the company and grow it. That's why companies like Google, Amazon, Facebook, that's why they don't pay dividends. Same reason with this one. And now what's crazy is this stock is absolutely killing it. Year to date, it's up around 67%, which is definitely outperformed all of the major indexes, the Dow Jones, the NASDAQ, and the S&P 500. Now what's crazy is when this stock fell in March, it rallied up, hitting highs within a couple of weeks. So I do think that momentum is going to continue to go into 2021. Now they do have around 105 million shares, so that's the float for this stock. So it's definitely a stock that does have quite a bit of float, which is alright. So now the price to earnings is right around 28, which is definitely putting it a little high than some people or some value investors would like. But me personally, and kind of as a growth investor, it's very common to see growth stocks have a higher price to earnings. You know, if you compare this one to Tesla's price to earnings is 1600, which is literally crazy. But the mindset I have, and I have always told you guys, is when Amazon was trading for $700, they had a price to earnings at 3200, which was crazy at the time, and a lot of people said you should not invest into this company, it's overvalued. But now looking back, you know, a couple of years later, it was almost foolish not to invest. And that's kind of the mindset I do have with First Solar. Yeah, it does have a little bit of a higher price to earnings, but me personally, I think it does carry a lot of potential. It has growing revenue, it doesn't have a lot of debt, it has enough cash on hand, it's in one of the top growing sectors, so everything is looking very strong for this company. So yes, with the revenue growth at 69%, I think the momentum's definitely going to continue to go into 2021. So now let's break down some of the technicals. So this is going to be like support, resistance, and kind of where I see it. I'll give you guys my price target, so let's go. Alrighty guys, so we have FSLR. This is First Solar stock ticker. You guys can see it had some very hard resistance here at 80. It hit it. We did have some major sell-off all the way down to about $35, $36. Got bought up, hit highs here at around 70, sold off. We had that March crash, hit lows at $28 before rallying up, sold off at that old resistance I have marked out, came down, hit this 20 moving average line. The 20 moving average line is a indicator that a lot of investors use to get a good idea of where the stock is going. On top of it, when the stock's above it, it acts as support. When it's below it, it acts as resistance. You guys can see it really hit it down in here, this 200 moving average line, and consolidated for a very long time. That's what I mean by resistance. It has a hard time breaking above it. Now, it hit it, sold off, had a resistant breakout, broke above it, and continued to rally up to $109. You guys can see it tapped that old resistance, acting as new support here. So the growth estimate is for it to go up around 60%. And if it does, that's going to put a price at around $120 per share. I do think that may be a little high here. The price target I do have is around $120. That would be around a 25% increase, a very, very fair price target for this stock for 2021. And I do think that with the momentum this stock has, it's just a matter of time before we see a breakout of this 109 mark. Yeah, right now looking at the RSI, it could be a little overvalued. It's at a 66. But honestly, with the sector it's in, with how dependent people are getting on renewable energy, I think that this is a perfect stock to hold for 3 to 5 years, see where it is. Because like I said, if that's say this stock just continues to go up 10%, within a couple of years, we're going to hit that $120, $130 mark. But with how fast this company is growing, people are going to be flocking to this stock here within the next couple of months. That's kind of my mindset. And obviously, if this stock just tanks down, what you guys could do too is just set your stops here at 90. So you're risking, $10 to make 60. Not to mention, another fantastic strategy for investing into some of these stocks here is dollar cost averaging. I always talk about it because it's one of the best ways to invest with very, very little downside but huge upside. What you guys do, instead of investing one lump sum of that $1,000, invest $100 a week. Buy a share a week over the next 10 weeks. So what it does is it gets a good average price for that time period. Because if this stock continues to go up, you have some shares, so you're going to have growth. But if it falls down, then you're just averaging down your price. It's a perfect way to invest with very, very little downside but huge upside. So that is it. I hope you guys enjoyed the episode, and if you did, hit the like button and subscribe to the channel. If you guys want to learn how to properly invest, go ahead and check out my course, and you guys can use promo code dividends to get 50% off. So at least check it out. So now that jump into that, we'll see you guys tomorrow. Take care. I'm getting so confused. Take care, guys. Bam.